How's it going, traders? Welcome to another video. This one is going to be a trade breakdown of four of my trades which I took, two on the goal, one on the crude oil, and one NQ trade. After reaching a key level on Monday, which is the low of the week, we expect another further price delivery, what could be a retracement to the expansion or a reversal higher. So after taking the Friday's low, the Monday candle created the second candle of the swing point, which was confirmed by the hourly change in state of delivery. So we were expecting the Tuesday the continuation higher in the terms of the weekly profile. So this was my idea for the gold longs. This trade was executed in the London session. So dropping down to the 4-hour chart. On the 4-hour chart, there isn't much to see. We have SMT divergence at these lows. The silver is not taking this, and the gold is creating that SMT divergence. And also we have feather swings above here, equal highs, and this feather swing right here. So this can be our target. But dropping down to the 1-hour chart, at this time in the London session, it's 2 a.m. when I went to the charts. We have this high resting above and this feather swing right here. And on the silver, we see a nice retracement to this fair value gap. And after changing the state of delivery, so this is a clear market maker model. This is the change in state of delivery for the daily wick confirmation and the reversal. And this is the first continuation order block after taking this high and closing above the consecutive series of down close candles. Now we are trading the Tuesday as a continuation higher towards the draw on liquidity, which are these feather swings, are the original consolidation in the market maker model. So when I went into the chart, I see that clean retracement on the silver, and we have created SMT divergence with the previous candle on the gold. Dropping down to the 30-minute chart, it is looking even more clear. We are retracing into this fair value gap, and now we are trading higher. So the time frame alignment for the 1 hour is 5 minutes. After this SMT divergence, this candle can be viewed as a reversal candle or the second candle of the swing point. So dropping down to the 5-minute chart. Dropping to the 5-minute chart, we have this consecutive series of down close candles followed by closure above, which is confirming reversal within this candle with SMT divergence, which is a trigger for reversal. And now we need a continuation order block. Now the price tapped into this fair value gap, and we have closed above that, which is labeling it as an order block or the continuation order block. And one thing more, you can see that we have closed above the down close candle within the 5 minute of the candle, which means this candle is going to be an expansion candle. So I enter at the close of this candle, my stop loss below the body lows, and I targeted this first objective on our chart, which was about 2 hours, and the price expanded or completing our objective. So this was the first trade which I executed on the goal. Now we will go over the second trade. The second trade was executed in the London session. It was also on a gold. From the Asian session, we are consolidating. As you can see on the silver, we are like ranging in between this candle. This is inside bar, inside bar, inside bar. And we have a range to deal with, the range high, the equal highs, and the range low. So I was framing that as a long because after taking the consolidation range low, we have to go to the consolidation range high, which is the classic accumulation, manipulation, and distribution. So I waited for the manipulation of the either side since we are close to the low. So I thought up manipulating the low and then trading back higher into the range high. So this was my idea, letting the next candle print. Now we have taken the consolidation range low, and also we have a nice swing formation to deal with. We have failure swings equal highs above us and this previous day high. So this was my idea for the longs. Now dropping down to the 5-minute chart. Now on the 5-minute chart, we have consecutive series of down close candles and to the manipulation, and now we are closing above that, which is confirming that as a change in state of delivery. So this was the change in state of delivery. Now we have to wait for the continuation order block. And also I went into the chart around 4 a.m. in the London session. So I wanted to see a closure below these down close candles. Now we have a closure above the consecutive series of down close candles and to the 15-minute of the candle, which is high probability. So I entered on the next candle on the closure of this. My stop loss was below the bodies and I targeted the consolidation range high. Price did went to the range high after manipulating my stop because I have to put it on the bodies. But usually after this bulkier order block, I want to put my stop loss below the body lows and this time it got me. Now this is the trade I executed on the NQ, which was a 4-hour trade. Starting with the daily chart, we tap into this daily fair value gap or imbalance, and also at this time we are creating SMT divergence with the yes. The yes is not taking the previous day low, and the NQ is taking that low, which is creating that divergence between the pairs, the SMT divergence. The SMT divergence is nothing but the confirmation for a reversal. Correlated asset is taking this low and the leading asset is not taking it, so this is confirming the reversal. Now we have the idea on the daily chart for the longs. Now dropping down to the 4-hour chart. On the 4-hour chart, you can see we have failure swings above us. This is a failure swing, failure swing, failure swing. So we can target it because we are trading away from manipulation towards the failure swings. If you don't know about this, you can watch my previous video. And also after manipulation with SMT divergence, which is a trigger for reversal, we are going higher. And one thing more, we have a 6M candle reversal. So the 10M is going to be an open low high close or a bullish expansion candle. Now dropping down to the 1-hour chart to confirm this even more. Now dropping to the 1-hour chart and going into the New York session, we have a consolidation from the daily open and we are protracting away from this, and we have bunch of fair swing, this right here, this and that. These are our objectives to target. So I target that swing point because it was lying above the daily open, which is right here in the current day high. On the days like that, when we are consolidating, which is consuming the range, and we are reversing and the New Year session, we have to target the current day high or the objective above that. So this was my objective. And going into the chart, we had the 8M candle reaching into a key level, creating SMT divergence at the previous day low. And now the 9M candle is confirming that with that closure. So this is a reversal signature. If you don't see a swing point, that doesn't mean that we are not reversing. The swing points actually are composed of the phase of price delivery. Like for example, I will show right here. When we are creating the swing point, the one candle of the swing point is going lower, the second candle is like reversing that and changing the state of delivery, and the third candle is expanding higher. So the swing point itself exists of the phase of price delivery, and on the lower time frame we reach into the key level and we almost reverse within this candle, but we didn't have that closure. Now with this 9M candle, we reversed and closed above the previous candle, which is confirming that reversal signature on the lower time frames. Now dropping down to the 5-minute. Now despite the bullish SMT divergence, the ES was just lagging and consolidating. So I choose the NQ over ES. Now we have a closure above the consecutive series of down close candles, reaching into a key level in SMT divergence. And now within the next candles open, which is the 9M, we closed above those consecutive series of down close candles, which is confirming that reversal. That doesn't mean we don't have a swing point, but we do have the change in the straight up delivery or the reversal signature. Now we need a continuation oral block to deal with because I let this candle play to confirm our idea. Now going into the 10M, which was expected to be an expansion candle after the 6M reversal, we had this order block, tiny fair value gap, and now the candle is tapping into that and closing above this candle right here, this down close candle, which is confirming this is a continuation order block. I enter at the close of this candle, my stop loss was below the current candle's low, and I targeted that high, which is about 3.85R, and the price expanded and completed our 3.85R target. The execution will be shown on the right side. So here we are on the crude oil daily chart. This trade was executed on Wednesday. So after large ranges, which is enormous candle down and this candle, we are getting smaller ranges, consolidation after expansions. Now going into the new week, we have SMT divergence at the price is low at the consolidation range low, which means that the RB is taking the consolidation range low and the crude oil is creating this SMT divergence. So that means that crude oil will also go higher. And one thing more, we have failure swing above us. This is a failure swing, a failure swing, and a failure swing. So my target was the highest failure swing right there. And this was my idea from the daily chart to go long on Wednesday. And also we have this candle 2, a swing point, candle 3 expansion, expecting the Wednesday to be an open low high close or a bullish expansion candle. Now dropping down to the 4-hour. Now on the 4-hour chart, you can see we have failure swing above us, and RB tapped into this fair value gap after taking this candle's low, which is the current day low. And at the same time, the crude oil also took this low. So this means we have a manipulation, the low of the day, and now the 2M is going to be an open low high close, which I confirmed on the 1-hour chart. So here on the 1-hour chart, we have manipulated the current day low on the RP and this low on the crude oil are also the Asian low. Now, in order for expansion higher, we need the swing formation or the change in the state of delivery to confirm the low of the day. And so we can trade into those feather swings and that high right there. So with the next candle, which was at 3 a.m., we have printed that enormous bullish candle closing above the previous down close candle, which is changing the state of delivery to the upside and confirming the daily profile or the daily reversal. So now we have a candle 2 reversal. I went into the chart around 4 a.m. London time. So when I saw that, I dropped down to the 5-minute chart. So here on the 5-minute chart, you can see with this bullish expansion candle, we have changed the state of delivery, consecutive series of candles followed by a closure above. And now we need that continuation order block. Since we are expanding higher, we need a retracement or another phase to get inside with the distribution again. I waited for the next candle open. Now we have failed to close above this candle. Once again, we have manipulated this low. And now we have closed above the consecutive series of down close candles, which is confirming that continuation order block. But since this is a large size order block and we are taking most of our time from this, so I waited for the next order block, which was the down close candle prior to the open up the new candle. Now we have tapped into this fair value gap, and for the continuation order block, we need a closure above this. And with the next candle, within the 5 minute of the candle, we have closed above this down close candle into the previous one, which is making this the propulsion block. So I entered in the next candle. My stop loss was below this low, and I targeted that high from the daily, which was around 4.85 hour. But due to the CFD prop firms, we had like 8 points spread, and we didn't take that high on the daily chart. So I entered the trade here. I trailed my stop loss to there, this level, because we have a down close candles into a fair value gap followed by closure above. This becomes my invalidation point. So I trailed my stop loss to there, which becomes around 2.7 or 3R because my entry was filled right there. And then the price reversed. But on the CFD prop firms, we haven't reached this high and the price reversed on me. This 5R trade ended up a 2.7R trade. I will add the screenshot on the right side. Hope you guys have learned something from this. If you want more videos like this, tell me in the comment section. Make sure to subscribe to the channel and like the video, and see you in the next one.